Hello, hello, hello. Happy 2026. I hope you guys had an amazing 2025. And per usual, I am here with the 2025 tax update. There's a lot of information I would like to share. So grab your snacks and listen up. Before we get into the meat and potatoes of this video, I want you to give this video a quick thumbs up, leave a comment, and make sure you share this video with any and everyone that can benefit from it. Let's get into it. Hello and welcome. My name is Shantae Hall. I am the owner of SAC Tax Solutions. I'm also an enroll agent. As you guys know, I will first discuss what I feel are the most important or the most common tax updates for individuals. Then I will get into the business side of it. But the IRS is trying to help taxpayers have a better online experience. So they are definitely shifting a lot of their services to online. They're digitizing the tax experience. So they are encouraging taxpayers to set up an account, which is easy to do. The first thing you would need to do is create an ID.me account, ID.me account. And once you're verified, you're going to use those credentials to sign in to your IRS account. In fact, you'll use those credentials to sign into any government account. And there are two ways to get verified. You can self-verify, which is all online. You're submitting your identification online, all your personal information online, or you can speak to a live agent to verify. But once you're verified, that credential you will use to log into your online account. And this goes for individuals as well as businesses. And once you do have an online account set up, you will be able to actually get quite a bit of information through your online account. If you are selected for an audit or if you're actively being audited, that information is available online. You can pull your transcripts, your tax transcripts, your account transcripts. You can pull a payment history. You can set up a payment plan using your online account. If you are being represented and you have a power of attorney on file, you can actually view that power of attorney on file. So there's a lot that you will be able to do, which will cut out the need to call the IRS, wait 2 to 3 hours online. You can just set up an account. Most questions will be answered or can be answered by going to your online account. The IRS is still experiencing processing delays. What else is new, right? So paper processing delays, amended return delays. In fact, they are still processing 2024 as well as some 2023 tax returns. Identity theft plays a big factor in that. If you are a victim of identity theft, 9 times out of 10, you have experienced a delay in getting your refund or having your tax return processed. IP PIN numbers. An IP PIN number is a number. There's 2 ways to get one. The IRS will automatically assign an IP PIN number to you, or you can request one yourself. Now, once you are assigned an IP PIN number, that PIN number is required each time you file an electronic return, and you will get a new IP PIN number every single year. You can also contact the IRS yourself to request an IP PIN number, and that's usually an IP PIN number is typically assigned to you when you have been a victim of identity theft or the IRS suspects identity theft. So it's easy to get. Again, active IP PIN number is valid for 1 calendar year, and the following year you'll receive a new one. So just keep that in mind when you receive in the mail. Put it in a safe space because you will have to use that to file your tax return electronically. The IRS has changed their enforcement and compliance protocol, and they're using AI to help with enforcement and compliance action, audit selections, cross-checking, taxpayer information, taxpayer matching, inconsistency with tax returns. They're using AI, which is going to put them in a better situation or a better position to select returns for audit or to pick up red flags or inconsistencies with return. So keep that in mind. We're going to definitely see enforcement action increase a great deal. Now that there's no longer a COVID hold, the IRS is going to, that is their #1 priority, enforcement and compliance. And again, they are using AI to do it. One big beautiful bill, or OBBB, or OBBB. That's a new tax bill, and under that new tax bill there are hundreds of new provisions. Obviously, I'm not going to go into all of them during this video. I will touch on a few key ones, but that replaces the TCJA tax provision. The beautiful bill was enacted on July 4th, 2025. As I mentioned, it has hundreds of new tax provisions. It has permanently extended some of the TCJA provisions, and it also has expanded the SALT and child tax credit deduction. The standard deduction has increased this year from previous tax years and continues to be quite generous, which eliminates the need for a lot of taxpayers to itemize their deduction. So for 2025, the standard deduction for a single taxpayer is $15,750. That is up from the previous year, $14,600. If you are a senior citizen 65 and older, you get an additional $6,000, and that additional $6,000 applies to all filing statuses, including married filing separately. For married filing jointly, the standard deduction is $31,500. That is up from the previous tax year of $29,200. And again, if each taxpayer, married taxpayer filing a joint return is 65 and older, you get an additional $6,000. That is quite generous. Married filing separately, same tax rate is treated the same as a single taxpayer. That standard deduction is $15,750, up from $14,600 from the previous year. And head of household, the standard deduction is $23,625, up from $21,900 from the previous year. And again, if your taxpayer is 65 and older filing head of household, you get an additional $6,000. And then finally, qualified surviving spouse, which is treated as married filing joint, the standard deduction $31,500, which is up from $29,200 from the previous year. Good news is the SALT deduction has changed for the better, and SALT is state and local tax deduction. That has increased or changed for the 2025 tax season. So for 2025, that deduction will go to $40,000, and for 2026, $40,400, and an additional 1% for tax years 2027 through 2029. The child tax credit for 2025 has increased. The increased amount is $2,200 per qualifying child under the age of 17, and of that $2,200, $1,700 of that is refundable. Here is a change that I think has been a long time coming, and that is no tax on tips. And of course, there are some limitations to that. The maximum annual deduction is $25,000, and this is for tip money. Okay, for self-employed, deductions may not exceed the self-employed taxpayer's net income. Itemization is not required and cannot be from a specific service business. Okay, the amount must be reported on Form W-2 or 1099, and the occupation must be one of the occupations that are listed by the IRS. A few other things to keep in mind: the tips must be paid in cash, must be received from customers or through a mandatory voluntary tip sharing arrangement, and must be paid voluntarily by a customer. This goes without saying, but I feel like I have to mention it. Any amount received from illegal activity, prostitution services, pornographic activity is not qualified as a tip. I'm just saying. Here's another good one. No tax on overtime. That's a good one. The maximum annual deduction is $12,500, $25,000 for joint filers. Itemizing is not required. I think this is amazing. No tax on tips, no tax on overtime up to a certain amount, of course. Overtime amount must be reported on W-2 or 1099 or other specified tax form. No tax on car loan interest up to $10,000. Someone mentioned or asked me about that some time ago, and I was like, I just can't see them making this provision. Here it is. Here it is right here. It's part of the one big beautiful tax bill. No tax, interest. No tax on car loan interest up to $10,000. And of course, you know, that amount is phased out as your income gets higher, but that is the maximum up to $10,000. And of course, your VIN is required, and then the name of your lender must be reported on the return. Trump accounts. People have been buzzing about that, and actually I don't think it's a bad idea. I think it's a really good provision. So basically, it's a type of IRA. It's a tax deferred account. It allows beneficiaries under the age of 18. The annual contribution limit is $5,000. So this is a great way for young people to start investing, opening up their first investment account and start investing their money. Post-tax contributions, Roth contributions are allowed, but they're not tax deductible, and no distributions allowed before age 18. Hey, this is a great thing. This is a really good stepping stone. I am all for this, okay? Employers can contribute up to $2,500. Now, the pilot program provides $1,000 government contributions for eligible children. Trump accounts. I like it. So other credits that have changed, or credit deductions that have changed under the one big beautiful bill, adoption credit. So previously, adoption credit was taken as a deduction, but it was not refundable. For the 2025 tax season, the adoption credit is now refundable up to $5,000, and it is adjusted annually for inflation. Qualified adoption expenses up to $16,810, and special needs taxpayers can claim the maximum credit without incurring any actual expenses. For the child independent care deduction, the percentage amount or the dollar amount will remain the same for 2025. 2026 is where we'll see that new increase. The IRS continues to expand on their digital asset program. You know, each year they're coming out with information on how they would like digital assets to be reported and how it should be taxed. Now, there is a form 1099-DA for digital assets that should be used to report digital assets. A few things to keep in mind: digital assets are treated as property, not currency. So that does make a difference on the taxation. So digital assets can be taxed as ordinary income or capital gain. Okay, and determining the fair market value of digital assets is very important. So it's up to you to keep accurate records, because the record keeper may not be keeping track of the fair market value or your cost basis. So it's important that you do that. But starting in 2026, brokers are required to report cost basis for digital assets. The clean vehicle credit or electrical vehicle credit has changed. For previous tax year, the maximum credit for electric vehicle was $7,550, and that's for the purchase of a qualifying electric vehicle. So the new law for 2025 moving forward, the credit expires for vehicles placed in service or acquired after September 30, 2025. The energy efficient home improvement credit has also changed. So for the previous tax year, the credit was 30% of the qualified improvement. The annual maximum credit was $3,200 and $1,200 limit for most improvements. The new law, the credit will be allowed, the credit will not be allowed for any property placed in service after December 31st, 2025. The energy efficient home credit expires for homes acquired after June 30th, 2026. The charitable contribution deduction has changed. The limit for non-itemizer is $1,000, $2,000 if you're married filing joint. For taxpayers that itemize their deductions, the new law permanently extends the 60% adjusted gross income limit for cash contributions. There has been some provisions regarding gambling loss deductions, and this is going to affect quite a few people. So the new law, One Big Beautiful Bill, permanently extends provisions limiting deductible losses and expenses to gambling winnings. That has been in effect for quite some time. But now the limit deduction for gambling losses and expenses is limited to 90% of the losses, regardless of if the person is in business of gambling. The current law regarding student loan debt expires in 2025. So previously, when student loan debt has been discharged, that discharge can be excluded from income or from your tax return for any reason. So effective for the 2026 tax season, an exclusion is only allowed if it's due to death of the taxpayer or the taxpayer become permanently disabled. Some other provisions that have been made permanently under the One Big Beautiful Tax Bill, casualty losses limited to areas have been made permanent. The personal exemption, so once we thought at some point that was going to come back, the personal exemption has been made permanent. 0 permanent personal exemption have been made permanent. Miscellaneous itemized deduction is permanently gone. Moving expenses have been removed permanently, with the exception of military moves. There are 2 provisions that I think are very important that affect business owners. One is the qualified business income deduction. That has now been made permanent. So if you are a business owner, you will receive, with business income, you will receive this deduction on your personal return. Now there is a new $400 minimum deduction for active qualified businesses. And of course, you have to have an active qualified trade or business that you are materially participating in order to receive the qualified business income deduction. Qualified tips are excluded from the qualified business income deduction, and this is effective for tax years 2025. Another provision that I think is very important is the 100% bonus depreciation has been made permanent. You are automatically elected in this. You can choose to elect out of that, but it has been made permanent. And another important thing is there is no cap on the amount, even if it creates a net operating loss for the business. 179 depreciation expense has been limited under the One Big Beautiful Bill Act. The new limit is $2.5 million, and it is indexed for inflation. It expands immediate expenses for small and mid-sized businesses. Expense and phase-out limit does apply. There has been no changes to eligible property regarding the 179 deduction. For the business interest deduction, the amount of 30% of the adjusted tax income limit and the small business exemption remains unchanged for 2025. Business loss limit was originally scheduled to expire after 2028, but the One Big Beautiful Bill Act has made that permanent. Disallowed losses can still be carried forward as net operating losses. Wages and capital loss are still excluded, so that hasn't changed. That still remains the same for 2025. Previously, disallowed losses carried forward as net operating losses, wage and capital losses have been excluded. Under the One Big Beautiful Bill Act, the expiration date for business loss limits have been removed, and it applies to all tax year beginning December 31st, 2026. You guys spoke and I listened. I tried to make this video as condensed as possible while still touching on the provisions that I felt were most important. So that is it for this video. Be sure to give this video a big thumbs up, subscribe, like this video, leave a comment, and until next time, I look forward to working with you guys again. Thank you for your support. Have a blessed 2026. Bye now.